Gold just hit a record high of $3,440 an ounce, but can it keep this momentum going? In this video, I'm going to dissect the gold chart using GLD, and we're going to talk about some of these flashing indicators that are showing just extreme overbought levels and the potential for a pullback here. So let's go ahead and dive into the charts right now. Let's take a look at GLD from a weekly standpoint. Now, GLD, going all the way back to 2004, had a trend line that it was following up until about mid-2018, and it followed it pretty well, bouncing off of it each and every time. But mid-2018, the trend line started steepening. Now, what you're going to find is that the way that GLD has been behaving, particularly over the last 2 years, is very similar to what we saw out of NVIDIA over the past couple of years as well. So rising trend line starts to steepen. We have this yellow line that converts more to a steeper purple line, and that was off of the 2018 lows. Then all of a sudden, we're getting even steeper. And notice how we're only like testing these trend lines one time, and then it just goes absolutely bonkers on the first pullback. And that first pullback, it gets even steeper. Once again, one test, we get much steeper and steeper and steeper. So now we're in 2014, and what we keep seeing unfold is a steepening of this rising trend line. And this is where we're at now. We're at a trend line that's extremely steep. And despite how steep it is, we're well detached from it. So when you look at it from multiple angles, right here at 314, where GLD is currently trading at, it's detached from every one of these trend lines, and even more so from the one that goes all the way back to 2004. Now, I'm not calling for a pullback necessarily to 150, which would retest that rising trend line. That would be more than a 50% drop. Not calling for that at all. But there's some key support levels that if we do get into a major pullback here, that you'll want to keep a close eye on, namely this big cup and handle on GLD. This would take us all the way back to this 196 level, which again, from 315 seems like a far cry that we would ever see something like that. But when you look at some of the things that we've seen in equities, pullbacks like this is very much possible. And let's look at NVIDIA. I mean, you had a similar kind of a breakout here where you had a big rounded saucer and then almost like a handle to a cup and handle pattern before it just took off, eventually pulling back from 152 down to 96. Going back to gold, we had the big rounded bottom followed by a period of consolidation and then the epic breakout. What you have to be careful of in these scenarios, whether it's with equities, whether it's with precious metals, is that charts are charts. They all tend to exhibit very similar behavior, some to much greater extremes than others, but GLD is no different in that regard, that at some point there's going to be a pullback. If you look at it from a Bollinger Band standpoint, you're going to see just how disconnected it is. Even on the weekly chart, it's trading for 3 straight weeks outside of the upper Bollinger Band. Now, we haven't seen that happen a lot over the years. We had some here back in August. We had some back in early 2024. Each time either leading to a period of consolidation or an outright pullback. If you go further back in time, you actually see where when we get outside that Bollinger Band, it did pull back pretty ferociously. And we've seen that numerous times throughout gold's history. Whether it's, in 2022, we got well outside of it and it led to a pretty strong pullback going all the way from 193 down to 151. So the potential there for a pullback is quite significant. Now, this is just on the weekly. What if we look at it from the daily? Again, huge candle bodies, full candle bodies well outside of that upper Bollinger Band. Now, this measures 2 standard deviations above the 20-day moving average. If we do 3 standard deviations, it's not quite as extreme, but the level of where it is at is something that we don't see very much of. We've been testing the upper band of 3 standard deviations, something almost unheard of for gold in the past. And when we have tested it to that extreme, like what we did back in October, it did lead to a significant pullback. So there's not as much history of getting on the underside of the 3 standard deviations of the 20-day moving average. But when we do, it usually does lead to a pullback, just like what we have seen in many instances that I've already shown to you here. Also, this is becoming a very crowded trade. When you look at the volume just over the past month alone has been incredibly larger than anything that we've seen of late. And it's steadily attracting a lot of bidders. Now, one of the things that's attracting the bids in gold is the fact that equities is struggling so much that people are flocking to gold as a safe haven because they're seeing it go up each and every day. So retail's chasing after it. Now, I know there's a lot of economic factors that are going into it, but what I'm focusing on here is strictly the charts, because oftentimes the charts will tell us the greater story involved here. And right now, there is a ton of FOMO that is leading traders to continue to jump long into this precious metal. So for me, one of the things that I always strive to do is not jump into something after it becomes incredibly obvious that the move has already been well played out. Yes, there may be still further upside for gold, but the easy money has already been made. Now, you're just hoping that there's still room for it to climb to maybe from 315 to 320 or 325, which would be really good. But in doing that, where are you going to put a stop loss at? Probably below the lows from this month. That's the nearest stop loss because there hasn't been really any pullbacks to offer up any support for stop loss placement. So if you're trying to get it from a 2-to-1 reward risk ratio, putting a stop loss below 272, which is about 15% below where it's currently trading at, would require a 30% return. That means you're looking at a $62, $63 move on gold or on GLD, which would take it all the way up to about 378. That means just to get a 2-to-1 return on this trade and to use a good stop loss placement, you're looking at a move all the way up to right here from where it's currently trading at. To me, that doesn't make a lot of sense. It's better to wait for a pullback or some kind of consolidation. Again, it doesn't mean that it can't go to 4,000 or to 5,000. And you'll start hearing a lot of people on Wall Street talking about how gold is going to go to 4,500 or to 5,000. And they like to sensationalize. They always like to have a target that's higher than where it's currently trading at. And then when it starts to pull back, what you'll start seeing them do is changing all their targets and starting to put it below because they want to act like that they had their targets below where it's currently trading at when it starts to pull back. They're not really helpful target prices that Wall Street puts out there, and they like to pump things like gold, like silver. And I would refrain from just jumping into a stock or an ETF because Wall Street says that it's going much higher, because all they're trying to do is cover their butts to make sure that they have a target that's higher than it's currently projected to hit. If you enjoyed this video, I'd encourage you to like and subscribe, and let me know down in the comments below, what is your plan with gold? Are you holding on to your position, or are you starting to take some profits here? It's up an incredible amount just this month alone. So let me know down in the comments below. Thank you guys, and God bless.